there's always a lot of competition, who's the best, and you've got to factor in, things like
Yeah.
pricing, things like experience. If you're going to go into law, you probably want to try and pick the best person. They're probably going to be the most expensive person.
It's about the narrative as well as the numbers. What people often miss is that lenders, whether they are banks or a lending fund, they are primarily buying into the people who own and run that business.
Growth is a risk in itself. I'm a firm believer in business that there's kind of like two cavities of death. And I think one is when you're sole proprietor maybe, or one or two people, and it's a nice little business, and then you want to go to like 10 people. That stage is a very risky stage.
There are people doing the job who've never lent a penny in their lives. They've never been inside a lending institution. I think that gets you a certain way down the track, but there will be circumstances when that sort of approach doesn't really deliver the best result.
So welcome back to Build with Dean, and today I'm joined by Steve from Obica Business Funding. And we're going to dive into what investors really look for beyond just the kind of pitch. And when it comes to funding, how you can structure your finances and secure the best funding deals as a business. We'll unpack kind of common mistakes. Steve's expertise is vast and wide in what he does. Sometimes it's about who you know. Sometimes it's about how you structure the deal. But hey, we've got the man here, so why don't we dive into it? Steve, do you want to just tell the audience to start off with a little bit about you and what you do at Obica?
Sure. Well, what I do is I help businesses navigate what is a very fragmented market for funding. So the question that a lot of people come to me with is, we have a bank account, but we don't know anybody at the bank. They don't seem to know us. How do we go about getting funding for our business? And that is where a sort of experience and good contacts can help the business owner get in front of the right people to get the right funding package. I've been doing this, Dean, now I'm in my 9th year as an advisor for businesses. But before that, I spent a few decades actually in banking, looking after banking relationships for the big banks. I started out at NatWest. So I've sort of seen businesses of all shapes and sizes, all different stages of growth, and all different types of funding requirement. And it's having that background that allows me now to be able to have good relationships with decision makers inside the banks and inside the new banks and new funds that are lending to the small and medium size segment. So that's what I'm about.
And within that, just thinking from a business point of view, whatever size of business, knowing that those new banks are around is probably one thing that people don't know. You only know what you know, right? So do they change often? Like how much does it change?
It's changed to the effect that the high street banks that everybody knows, and the ones that there are still banks on the high street. I mean, those banks are now lending less than half of the total amount into small and medium-sized businesses. So they've really lost a huge market share over the last 15 years. And the sort of two reasons why that has happened. One is that after the global financial crash, those banks, some of which went out of business, if you remember, have had to scale back large parts of their business activity and become a far safer institution. And that means they would far rather do mortgage lending than lend an unsecured loan to a business very often. So they've scaled back, and also they've been regulated now very tightly. And what that means is it becomes quite expensive for banks to be able to provide sort of medium-term loans. They still provide medium-term loans, but it's become a much more expensive for the borrower, unfortunately. And so as a consequence of all of that stuff, what's happened is new banks have been formed to come in and pick up where those banks are no longer operating, so that they can undertake that sort of business that the banks used to do.
So those new banks will have a higher aptitude for risk around those particular areas.
They do, and they're often, the ones I speak to, sort of every day of the week. They are staffed by people who used to work for some of these banks and used to do some of these transactions inside the old banks as well. So,
Okay.
it's a real mix of a marketplace now. And for most business owners, they probably don't even know the names of these newer institutions that are doing the bulk of the lending.
And is that how big is the problem, I suppose, in terms of so what? If we ask that question, so what? I mean, there's banks. I could just. Why do I need to know that, the new ones? So, how big is the problem, and is that problem bigger for particular types of industries, or how does it work in terms of?
It's more about the size of the business, I think, in answer to your question, Dean, because a lot of people might remember that banks in the past, there are a lot more of them. They had people inside those bank branches who had authority to be able to grant loans. I mean, to give you a really silly example, but it's a true one. When I was in NatWest, I was in a position I could lend a company £500,000, secured or unsecured. I didn't have to get any credit approval or any credit committee. I could just take that decision myself. It seems mad now when you look back that they had that amount of sort of flexibility, I guess, in those days. But different bank managers in different places would have different levels of authority, and they could just sort of grant these loans and overdrafts to help their business customers. You can no longer do that. All that has gone. And what that means is a lot of the experienced personnel have sort of been taken out of the frontline places in branches now. And so the business customer is thinking, well, I've got nobody allocated to me. I've got to sort of go into a call center type of environment to try and request a loan of £50,000 or £100,000. And they are completely lost. And unfortunately, to use the old adage, very often, the computer says no, and they've not had a meaningful discussion about it with anybody. So it is very frustrating. And this is the most common complaint I get from people who are completely lost with the current setup.
Yeah, and I can imagine the stress of that and the frustration. And when I say I can imagine, it's not that, it's just that we don't go out for funding. So we don't have that stress currently. Not saying that we never will. So yeah, I mean that's a huge problem for businesses. And so I suppose where you come into that is then what next?
So what next is really understanding and knowing people who can access these new lenders that are in the market and that are actively lending. So there's a whole big community of finance brokers who will have, I mean, some of them, if they deal with loans up to £100,000 or £250,000, they may have a panel of lenders of about 100 lenders on their panel.
Yeah.
And they can access the right lenders for a particular piece of business and get the best possible sort of package for the client. But it depends on the type of transaction. If it was something which is a property loan, there'll be probably a different pool of lenders for that type of transaction. Or if it's an invoice finance type of working capital line, there would be a different pool again of people. So I think a lot of the business owners are really, either relying on their accountant or relying on a broker to be able to sort of put them in touch with the right number of lenders who can quote for their particular piece of business.
And I suppose the challenge of that is that if I was to open up my LinkedIn, I could probably find a lot of finance brokers. But maybe my specific, so how does that work? I think I know the answer, but I'm going to ask the question anyway. So if you have 100
Yeah.
finance brokers, do they all have access to the all of the lenders? Do they all have access to the experience to help that particular business, or how does it work when you have so many different providers? The stress for me is, one, how do I find the right person to work with?
Yeah, I think you have to. It's a very good question actually, because you have to ask the right questions to understand whether the broker covers your part of the market. So, in my case, I don't really cover the sort of the high volume, smaller transaction size, anything below £500,000. I'm not the best person to speak to about those types of situations, because the lenders that I know who do more sort of structured lending or medium term lending, they have a higher minimum amount, if you will. So I think you need to ask finance brokers, frankly, what part of the market. They can't cover every part of the market.
Well,
Nobody
this is
can. They
brilliant.
have to
This is why,
specialize.
yeah, help it. So if we imagine our audience is going to be a mix, so there will be some, but the audience will have, a vast amount of people who are going to be smaller and looking for a loan less than 500,000. But there's going to be a lot of people watching this who, actually they are looking for that, more sizable side of things. So that's great. If you could give a bit of guidance on, what should they ask? What should they be looking for? That's gold.
Well, yeah, that's fair enough. I mean, they have to be. I mean, if you take on board the fact that you don't really need you don't really will be able to find, shall we say, somebody who covers the whole market, then you're going to ask them certain questions to really gauge whether they cover your situation. I would say a question like, can you provide me with 3 recent transactions that are comparable to my situation? And see if you can get specifics rather than just sort of vague descriptions, if you will. What lenders on your panel actively handle this type of funding that I need? I think these are sort of questions where you're really trying to probe that they have the relevant experience, recent experience, and recent deal success, because a lot of brokers work on a commission basis. So you will find you're placing faith in somebody, and you won't know if you don't ask these questions. You don't really know how successful they're going to be until the very end of the process, whether or not they've been able to secure the funding for you or not.
And they're probably going to say, what's the question? The answer is yes when it comes to do they take on the business because they're, getting a commission, potentially.
Yeah, I mean, I think there's a lot of good people out there who do this work. I wouldn't want to suggest otherwise. But I would imagine if you're working with that business model, you probably, maybe they are tempted to favor the lenders that pay them the highest commission. I suppose that's always a danger in this sort of thing. I mean, it will be transparent and commissions will be divulged, so you should absolutely have visibility on the amount that that part of the fee that you're paying will be paid as a commission to the broker. So I bear that in mind. But yeah, it's not an ideal system at that in that part of the market.
Yeah,
I operate in a different part of the market actually, because I don't deal with commissions. I deal with just a straightforward fee arrangement with a client. So it's a different setup for me.
Probably a more sensible setup. That sounds appealing, Steve. So how common would you think it is that people go to the wrong people? think that happens a lot.
I think it's more common than you might think, Dean. Sadly, I think it's
Mm.
more common. And I mean, a lot of these things are driven by personal relationships, or they've been introduced to people at the golf club, or in the pub, or through somebody else they know. You know, there's a good sort of solid interpersonal connection, thankfully, but they may not be the right person. That's the problem. I haven't got any statistics on how often people end up in the wrong place, but you know, I think experience matters a lot with these things, Dean. And I think there are people doing the job who've never lent a penny in their lives. They've never been inside a lending institution. They are, they're following a sort of a rule book in their organization. And I think that gets you a certain way down the track, but there will be circumstances when that sort of approach doesn't really deliver the best results. So I think the more questions,
that's common and in a lot of things, isn't it? The same would be true of marketing, which is the sector that we're heavily within, and is that there's always a lot of competition, but who's the best, and you've got to factor in things like pricing, you've got to factor in things like experience, outside of things like law. I mean, if you're going to go into law, you probably want to try and pick the best person. They're probably going to be the most expensive person, but not always. But things like accounting, for example, I was speaking to someone the other day, and they were saying, the amount of times they come in front of a customer and all that matters is price. But the people that they want to work with are the people that they can add the most value to, and therefore they want to charge the most money to. And actually that's fair because it's based on value, right? So I do think that people have to pick the right person. There's all sorts of complexities around that. But just moving the conversation on to some another area. So just thinking about it, one thing that's playing on my mind is, often when it comes to trying to secure finance, and I would imagine that it's a bit like trying to exit your business, that there's probably a load of things that you have to put in place. Can you give the viewers who might be in that position where they need funding, like some ideas of what are the typical things that people need to fix before they should really put the package together?
Well, it's not so much. I think if you mentioned sort of selling the business as an exit, then you're absolutely right. There's a whole lot of preparation is usefully undertaken because you will then maximize both the price and the ability to sell the business when you want to sell it. I think when you're going for funding, you can just keep on waiting forever if you're not careful. And actually, putting funding proposals together is more about the narrative as well as the numbers. Because what people often miss is that the lenders, whether they are banks in a bank or a lending fund, a credit fund, if you will, they are primarily buying into the people who own and run that business. It is they may not be taking an equity stake, but they are absolutely reliant on the skill and judgment of the people who are running the business. And people think, well, if I want to borrow some money, I'm sure there's a sort of some sort of formula or a range of formulas I need to sort of make sure it fits into this box. And whilst that may be true, it is really not the most important point at all. It's really about who the people are who are running the business, and that sort of management assessment is really important, as well as all the usual business related facets in terms of what the business does, how it's positioned, how it stands with its competitors and suppliers, and all those usual sort of things that you would normally see. And that is not about preparation as such. That's about how you tell the story to get the best possible response. The numbers will then follow. I mean, ultimately, the numbers will determine how much could be borrowed, but the the story and I suppose the sort of the strength of the story will determine whether or not that loan will be granted or not.
That's
If that makes
fascinating
sense.
because that's a very different. That's a very. I hadn't even factored that in, but yeah, it's a very different approach and incredibly important as well. And that's probably one of the fundamental mistakes that people would make if they haven't got the right experience. I mean, obviously you've got donkey's years of experience, Steve. So that's fascinating to think about that. And so when it comes to telling that story, so again, that's easier than said than done because a lot of people struggle with the creativity of, piecing that story together. So how do you tackle that when you're working with somebody to try and, how does that come together? How do you tell the story is the question, I suppose.
Yeah, that's I both. Well, it's a mixture of taking information that the company themselves have already got. Often companies have got this sort of they've sort of worked out what they are and where they're going and what the key metrics are and where they are positioned, in terms of the market. But it's partly also from just speaking to the owners and the managers about the business and really building up a picture which is got to be compelling for the reader, but not to the point where you sort of ignore the risks. And I believe it's because what I do with my clients is I almost sort of produce it's a bit like a credit paper that you would see going to a credit committee, because
Mm.
I think what you need, you can't ignore the risks and you can't avoid the risks, but you can deal with them, you can mitigate them, or there are reasons why those risks are acceptable. And I think spelling that out just helps, the lending officer, whoever's looking at this and dealing with it, to be able to articulate that inside their organization. Because what you need to be able to do is to help the person you're speaking to deliver that message inside their organization. Because they're going to either have to write a credit paper or go to a credit committee and persuade probably more senior people than they are that this is a good loan to make and grant. So what you're trying to do is give it ammunition to that loan officer or bank officer that they can then position this in, as I said, in a compelling way that is sort of, all these decisions are on balance, but on balance, you will get a positive answer. That's what you're trying to achieve. What do you think, Dean?
Love that. Well, it sounds like you earn your fee, which is great. Um, and at the end of the day, if for our viewers, if you're a business and you're facing this very problem at the moment, need funding, and what do we do? Where do we go?
Mm.
Maybe you've got someone covering your corner, and maybe you don't. Then knowing that is a great start point, right? So it gives you the chance to look at it from a different perspective, and that could be a very valuable um, outcome because of that. So I love that. So do you think there are any kind of myths around funding that we can dispel? That are there any typical myths around funding?
Well, I don't know if they're myths, but there's certainly things that I think are really important to know. One is that if you approach, let's call them banks, right? So if you approach a bank with a proposal and you don't get the right answer because something you haven't covered the information just doesn't look like it's been pulled together, and they've sort of taken against it early on. It's really, really hard to turn that around, go back a second time. This is where first impressions, I mean, you can never, what's that phrase, Dean? You can't make a second impression a first impression. Can you tell me?
I don't know the phrase.
Well, you got to make your first impression has to be the best one. That's what I'm trying to say.
Yeah.
That's what I'm trying to say, because you will have something on record in that bank that they looked at this or looked at this company, or it's referred to them, or they had a look at it and they didn't like it for whatever reason. That these things tend to stick, sadly, sometimes
Mm,
without good reason, frankly. But there we go. You have to deal with the reality, and the reality is, when you need to go in and put that proposal together, you need to have done the preparation either yourself or with an advisor, so that you get the best possible chance of success. One of the common things there is the sort of work that I do for medium term funding is the lenders want to see a financial model. And that
yeah,
financial model is absolutely to allow the lenders to assess the viability, the serviceability of whatever the loan is that's being requested, work through, the trading numbers and how it all hangs together. All of that is true, but actually, it's also a window into the finance function of that business. And one of the worst things to put doubt in the mind of a lender is if they think there's a weak finance function, or the financial control is weak within the company, they would be far less inclined to make that loan available. So that is where companies, and I've seen this too many times, have tried to produce financial information on a spreadsheet in-house, and it's not in the, it doesn't convey the right image, I guess, or impression or quality for the people looking at that on the lending side.
sure.
And that is quite a tough one to take. So you do need to know where you need professional support, either from their accountant or from a specialist who does this sort of
And of
every day of the
course,
week.
in this area, so I mean, that's so valuable to understand that the first impressions count things, because we all tend to be of the nature of, well, I could have a go myself. Is what, a lot of businesses are probably going to be run by very capable people who feel they could be capable to do it themselves in all aspects. But there's a reason that we outsource and we delegate, right? So I think that upfront, getting the expertise up front is a really great tip to give the audience, that, to think about it very carefully before you put that application in, because I suppose afterwards, then the point is that every bank can see that you've made an application and it's been, um, they can see you've run a credit check. Maybe they can't. So how does it stick then? I've lost myself there then now,
Yeah, no,
actually.
all I'm saying is you don't get a second chance to make a first impression. That's what I was trying to think of earlier. What I'm saying
Mm,
is, if you put an inquiry in to, I had a case where I was engaged by a client to go to do some fundraising, and I put it across to a lender, but unbeknown to me, uh, the company had already, in like a few months earlier, put the same proposal into the lender, and that had been declined. And so, no matter what arguments I could bring to bear on it, they had sort of made their minds up. So when I say it sticks, I mean that
yeah.
these things, if they're negative decisions or negative views on a case, they don't tend to change those to a positive. It's
And
hard
of
enough
course,
getting
if
a positive.
Yeah, and of course, if they're not just going to one bank. If they're using a broker previously, they're going to probably all the providers in the market for that sector. So that's quite
Indeed.
telling. So just out of interest then, so at the level that you're working at, I should like to think that sometimes they would have a CFO in place, and so some of these things, in terms of the functional side of the financial departments, should look a bit rosier than when you go down a level. And for a lot of our viewers, they're in businesses where they can't yet afford a CFO. And so they're probably working with an accountant. So I know it's not the area that you deal with, but what's your thoughts on accountants then? Because they probably have a lot of responsibility to work, um, de depending on if they're that type of accountant. Because I think you've got two types of accountants, haven't you? One that's very
Mm,
transactional and let's look back at the end of the year, and one that's, let's help you grow your business, and then probably a few that are actually trying to help someone grow their lifestyle at the same time. Um, so
yeah.
do they have a bit of responsibility then to make sure that the financial department's in that position, or it's not something they get into?
It's a bit like your question you asked me about brokers earlier.
Mm,
The question to ask the accountant, if it's a small two-partner firm and they've got hundreds of clients and they're doing lots of year-end and tax work and such like, then maybe they haven't got the time, the resources, or perhaps even the sort of day-to-day experience of putting these things together. I
mm.
think the answer might be an accountant. Another good service that I see a lot of is what people call fractional CFOs, where a company employs somebody not full time, but they have somebody one day a week or something that they're using to provide that sort of higher quality of professional support, but they're not on the
And,
payroll, if you
and
like.
experience, maybe a background similar to yours.
Absolutely, and experience too. And also, there are people who will do this as sort of a one-off exercise in terms of preparing the information. I think it's always surprising, I think, for clients to think, okay, once you've got the loan agreed, you then need to provide, very often on a monthly basis, a lot of financial data to the lender. And you will need to be geared up for that. And that might mean that you employ somebody part-time, full-time, or you can use existing staff. It kind of
Because
depends,
of
I
the
guess.
manpower that comes into play at the time.
Yeah, because you
Wow.
need to produce regular information accurately and on time. And there's nothing bankers like less than having to chase up for the monthly numbers or seeing the numbers come through and they've got gaps or they're not quite right. I mean, it just casts an unnecessary question mark, I think.
Well, that's a
And
great tip. Have the team
yeah,
in place and the
yes,
ability to do it when you time it.
yeah, absolutely.
Mm, interesting.
Mm.
Um, here's a naughty question that
Oh
you feel free
no.
not feel free not to answer.
Okay.
But it was coming into my head then a few moments ago was, I wonder if ever funding is so wonderfully put together like by someone like yourself, and so they get the funding. Um, but sometimes an injection of cash can either accelerate growth or accelerate problems. Have you ever seen an example? That's a naughty question, isn't it? Examples of where businesses maybe have got the funding, but that hasn't actually, in hindsight, been the best thing they could have done at that time.
Well, generally, yeah. I mean, I think what you're thinking of, I don't know if this is what you're thinking of. I'm going to tell you what I think you're thinking of, is where businesses are looking. Sometimes people need additional funding because they need to bring a new product to market or go into a new territory or hire new people, and those things don't always. Or they might be making an acquisition. You know,
Mm,
that very often is a thing where you make an additional acquisition to bolster your own business, and you find actually the thing we bought hasn't quite worked out as we planned,
yeah.
and either certain things weren't disclosed or they weren't quite as we understood them, or the market has changed a little bit, and the results are not quite where you expected them to be. There's all sorts of statistics around about the success of acquisitions, and it's sadly not as high a success rate as we'd
What they
like to
maybe
think.
had, Steve, is perhaps they had someone who told a very good story on board,
That's
possibly.
very possible. That's very possible. I mean, if you're selling a business, you're always telling a good story, I guess. But the buyer
Yeah,
has to be
still.
canny and work out where the reality is for them and for their business and their skills. I think you're right, though. I think you can find businesses that are very conservatively run, that don't want to take on too much debt, and will happily sort of grow at a slightly lower pace, but a much sort of a lower risk endeavor for that type of expansion. And there are other
Mm,
people who want to grow really fast and load up the company with debt. And that can work, but equally, sometimes it doesn't. So,
Yeah, growth is a risk in itself, and I think I'm a firm believer in business that there's kind of like two cavities of death, and I think one is when, you're sole proprietor maybe or one or two people, and it's a nice little business, and then you want to go to like 10 people. That is a very
Yeah.
scaling to just that stage is a very risky stage. And then obviously kind of from there, but now you want to be a big business, you want 25, 50 people. I mean, that's even bigger. And finances help, but they can also highlight the problems that exist um, currently sometimes. But listen, tell me about what are the sectors that you work most within? Is is there, or is it vast?
I mean, it's pretty wide actually. The sectors that are more difficult to finance. I mean, so there are certain sectors that have assets and naturally have assets within them, physical assets,
Mm,
and that is always easier from a funding point of view. So the
yeah, sure.
classic sort of manufacturing business that operates out of property and has lots of kit around and things that have wheels on, all that stuff can be financed.
Yeah.
The sort of the business to business service type business that has really no assets, not much in the way of assets on the balance sheet, then you're relying on, unless it's like, if it's like a recruitment company is a good example. They always have money they're collecting from the various placements that they've made, and you can always finance against that income coming through. But generally, in the service sector, you're looking at providing funding to be repaid from the cash flow that we generated in the future. And,
Mm,
and that is what lenders will term unsecured, because it's not secured on a physical asset. It's not secured on a bunch of invoices. It's actually secured on, their sort of faith that the business will generate the amount of fund of free cash flow to service that loan. and that
mm,
and that is where the calculation in terms of looking at the future projections of the business needs to have a margin of safety, shall we say, for both the borrower and the lender.
and any tips for those kind of businesses that, preparation tips, I suppose, that they need to, what does that mean?
Well, I think the businesses are, if you've got a business that has recurring income, or you have a business which has long-standing clients, these are all very attractive businesses to fund. If you have a business, dare I say, business to consumer, and it's in it's retail, whether it's online or on the high street, you can fund those businesses, but you can't fund them to the same extent, because that is a far more kind of unreliable. And the areas, the areas that banks are very wary of are things like fashion type businesses, where things can change. Frankly, that they went through a spate of funding. Private equity were investing, and banks were supporting them with debt for all the various upmarket burger joints you saw on the high street, and they were rolling them out. I don't know,
Mm,
15 years ago. Some of them are still there, but some of them have suffered. That sort of casual dining area was seen as quite an attractive area, but it can sort of suffer in a bit of a downturn. So it
yeah,
kind of it what lenders want to see is sort of stability and reliability in a business. But very often, what the owners are looking for, because they're entrepreneurial, are all the growth prospects of a fast-growing business. So there's always a balance to be had between the two.
interesting. That's interesting for someone to think about as they're building it. So we, I'll be maybe putting you on the spot, and we can come back to it if I am. But so let's try and give the audience some tips that they can take away, or some things that they can action. So if I was to say to you, like, what are the top three tips you'd give to a business that's thinking about going into funding, or top five, or whatever you can muster up from that beautiful brain of yours, like what would the tips be that we could give to the audience? um, other than what we've discussed?
Well, I would say this, wouldn't I, Dean? The number one tip is to get some good quality advice.
Yeah.
I think it is my personal opinion that in the SME area, there are not enough good quality advisors helping business owners. So I think I, I do believe that good quality advice is worth paying for and will pay dividends for the owners. So that's number
Mm,
one, right?
yeah.
The second one then is to find the right person, as we talked about a little bit about earlier. Business funding advisors are not interchangeable. People seem to think they are, but they're not. They're focused on different market segments, different amounts, different areas of the market as well. So you need to find somebody who can provide the best advice based on their experience and contacts.
And it's not anymore a case of just on that as a point, and then you can give us some others, but it's not a case anymore of, well, what do I ask them? Because, with the best will in the world, you can open up one of the any number of LLMs, and
Yeah,
I might be deluded when I say this, but say this is my business, this is where I'm in, this is what I'm looking to achieve. What are the questions I should ask my broker to see whether I work with them or not? And I'm sure that's going to pull off some really, really good questions that are going to catch people off guard maybe a little, or give them some difficult hoops to jump through.
yeah, maybe so, maybe so. I mean, I still come back to what I said earlier about that. That is asking questions around, what is your current market knowledge in this particular type of funding? What are your relevant lender relationships? What experience have you got in doing similar transactions recently? Are you up to date? Are you in the market today? I think those are the things that will give confidence to the client that they are in good hands and they will get good quality guidance. Because quite often, this is another thing, sadly, I think is prevalent, is because a lot of people approach brokers who are commission focused. The broker is trying to do every deal that comes across the desk to get the commission. But sometimes the
Mm,
answer, sadly, is this is not quite right. You haven't got this quite right. You can't get this type of funding at the moment. Your business needs to look like this. You need to work towards getting into that sort of position. And it might be a question of size. It might be the makeup of the business. One of the things lenders don't like, as a good example of this, Dean, is where you've got your customers. I remember doing a deal early on, actually, when I was in the bank, where 50% of the turnover was to Marks and Spencer.
hmm
So this was a business that produced slippers. I imagine you got a few pairs of slippers yourself, Dean.
I actually don't. I wouldn't know what would make you ask
You're far
that,
too cool
Steve.
for that.
But no, I'm far too cool for a pair of slippers. No.
Well,
Um,
frankly, we did this deal. I mean, you can imagine what's happened next. They don't quite lose the M&S relationship, but they were so concentrated with
yeah.
one customer taking so much of their stock, and yet that number, M&S had a change of strategy, I guess, and they lost a lot of their business. And luckily, in a way, but it was with forethought. The business was set up that a lot of the owner had a lot of money in the business. So although it wasn't great for the owner to lose that element of their turnover, it didn't mean that the bank debt was in trouble. Shall we say? They were still able to service that. But those sorts of
Mm,
concentrations, either concentration on the customer side or the supplier side, are kind of warning flags, or there's certainly areas that will be questioned by a lender. I
mm.
possibly
I
gone off topic
remember.
there for you. I don't know.
No, no, definitely not. And I think it's really because I hear so many stories from business owners, and everyone's got a story to tell about, the past and things that have happened. And just you saying that reminded me of a time, not to do with funding, although I did have funding, so that it was relevant, but not at the scale of 500,000 quid. Um, more like 30 grand, 40 grand, something like that, and in terms of funding. But a few moons ago, it was about 15 years ago, maybe. So God, I'm
Yeah.
getting on. And had a business whereby, we had um one of our contracts was about 40% of the business. So it was, multiple
Mm,
six figures. And or nearing multiple six figures, so it was a lot of money. Um,
right.
and and um, and that's one of the biggest lessons I learned in business was that when we
Yes.
lost that customer, and we had to lose that customer because the relationship soured, they actually tried to take my people to them. And of course, those people couldn't come back to me, but they couldn't go to them. So it screwed me. Not only did I lose the customer and 40% of the revenue, I
Yeah.
also lost four members of staff, and I learned a very difficult lesson
Yeah.
because I think the 6 months after that were very incredibly difficult. And the business eventually inevitably went under, which at the time was the worst thing in the world. Right now, it's probably something that gave me a lot of knowledge, a lot of experience, a lot of strength. So it's a good thing now. I don't know if you
Sure.
can call that a good thing. Um, but it was a lesson learned, one of those moments. As you were describing that, that Marks and Spencer's thing, it reminded me of all that happened to me.
Yeah, no, it's true.
Um,
And it is fair to say you learn far more from things that go wrong than you ever do from things that go right. So you
Sure.
can apply
But
it.
this is why this conversation is so powerful because you'd think business owners at this level should, the level that you're funding at, would know these things, but we all move so quickly and we all, you know what you know, and it's very easy to make very simple mistakes. And then in hindsight, you're kicking yourself, right?
Yeah. 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 I see that a lot also in these acquisitions I was speaking of earlier. The person who's selling the business, who's now on the beach drinking pina colada, was the person who had the really important relationships with the key clients of the business he's just sold. Someone else is trying to pick that up. And then you're making those client relationships vulnerable because you lost your key man or key person there. So I think that
Yeah.
is all these things have to be borne in mind when you are applying for loans, and on their side, the lenders are granting them.
Mm, yeah, for sure. Um, were there any other tips? We went off on a tangent at tip two.
We we
Have
did
have we got anything else?
well. I think there's a lot in. This is a bit dull. I know it's dull, but it's important. There's a lot in the documentation of a loan that you can not pay enough attention to, and you become a
Yeah.
hostage to fortune. And I think this is this is this is possibly more. It's partly advisor led, but I mean, you almost always your legal advisor as well, who
Mm,
knows where the market is for these things. You'll find that bank documentation or lender documentation has many clauses and many ways in which it's seeking to protect the lender. And what the owner wants is as much flexibility as possible to be able to run their business. So if you take a thing like financial covenants, that can really trip you up 6 months down the line because you haven't got enough headroom in one of the test levels, which mean you thought you had a 5-year loan. All of a sudden, after 6 months or 9 months, you're getting called back in and they are saying you have breached this particular covenant test. And you have to do a load more work to sort of reassure them that it's a temporary thing. And then they're going to charge you another fee, and it's very painful. And you need to avoid as
mm,
much of this sort of future pain as you can by making sure when you sign that agreement for your funding requirements, you have gone through and negotiated every part of that um, documentation. That's what I'm saying.
mm. Sure. That's a really key important part. Um,
Often
so
missed, sadly.
yeah, I can imagine. And I think we're all guilty of, again, it comes down to that you're moving 6 million miles an hour. just sign the thing, kind of. But taking that time, slow
Yeah.
down a little, eh?
We're always used to ticking the box on terms and conditions, tick. No one
Yeah.
ever reads them, right?
Well, there's
You,
terms and conditions on so much, no one's got the
I
time
know.
to read them, but it's very important. So,
Yeah,
but that's probably a serious note, for especially for the listeners who have smaller businesses, sometimes taking that time, finding the time to kind of go into the details.
sure.
Again, it's one of those lessons learned that sometimes happens and people do it more when they've learned a lesson. Um, so yeah, those kind of things. Is there anything on the horizon in 2026 that people need to be thinking about that maybe they didn't in 2025? Like, is there anything kind of um, time specific that we can give the audience?
I, I, I think only, I mean, I think the world of finance moves quite slowly. Let's be honest, Dean.
That's it.
Oh, yeah, no, it really does. It really does. There's not anything coming down the track that people need to prepare for. Um, there is a new lending scheme that the British Business Bank have brought out in last year in the spring, the Growth
Tell me
Guarantee
more.
Scheme, which is it's something up to £2 million, where if you had a borrowing requirement that didn't quite fit the criteria for a particular bank, if they're signed up, and there are about 55 lenders that are signed up to this scheme, they may be able to fit that particular scheme. And because the government guarantee the loans to 70%, it makes a scheme that is, or a loan that might be deemed marginal, it might make that actually one that the bank can actually lend under that scheme. So that's something to
Okay.
think about. But there's nothing else that's imminent apart from everything we see and read in the news every day about the general economic challenges before us. There are one or two of
In
those.
in today's world, how much is it around about who you know? Does that still exist? Is there a who you know in this equation for some, or is that completely gone?
It's who you know in the sense of getting in front of the right people. It's not, I can't, because I've known somebody for 20 years and they're a decision maker inside a bank, I can't persuade them to do a transaction they wouldn't otherwise do. But what I
Yeah.
can do is I can get the client in front of that person and that institution, so they get the best possible chance
Based off of you.
or based off of my relationships and other people
Yeah.
like me who do this work, who've got relationships with the important lenders. Yes.
Interesting, because that means then obviously your network also becomes your value that you bring in what you do. Is that
Very
fair?
much so, Dean. Very much so.
Okay. So for the audience then that are of the right size for you, I mean, obviously if they're smaller, then they've got some insights that they can take and they can think about, which is going to be really valuable because, um, for how they move forward and how they find the right person, how they, what they need to look forward to. But there are going to be some businesses that, are following and do watch that that are of that kind of size that maybe funding's an area that they need to go, and the size of that is within the realms that you work with. So how can they reach out to you? One would imagine, Steve, that you're probably you're not doing 100 deals at any given time. So how does capacity work? Tell the audience how they can work with you.
Yeah, the capacity question is important. I would say I'm happy to speak to anybody and try and help folk. If it's outside of my particular sweet spot, I know people who will cover that particular part of the market. People can contact me through LinkedIn. Am I allowed to say LinkedIn?
Yeah, you can say whatever
Oh,
you like.
great.
Well, don't swear.
I won't do that. But I'm on LinkedIn. That's important to me. I post on LinkedIn every day of the week.
I'll put a link in the comments to
Thank
this
you,
when we
Steve
launch it.
Cockell. You can also contact me through the company website, which is, you'll put a link in, I'm sure, obicabusinessfunding.com.
I will do that.
And I've got all sorts of insights as well, in more detail on some of the things we've talked about today as well, on that website for people to read through. So they're probably the two main areas to contact me.
Brilliant.
Plus an email,
And are
if you'd
there
like.
any?
Yes.
Huh?
No, it's okay.
Are there any is there any favorite things that you like to do? Does it not really work like that? As long as you can help, you're happy.
Well, I'm always enthused, with dealing with sort of good people in good businesses, and that's
Yeah.
a key thing for me. But sometimes I get to a situation where things have not quite worked out. I had one quite recently, and I will, I get as much enjoyment from trying to sort of help people deal with an existing bank or an existing lender, because they're going through this for the very first time. I've been through this multiple times,
Mm.
and probably the people they're speaking to have been through it quite a few times too. So they do need somebody on their side of the desk that has sort of, had a number of these battles beforehand. So whether it's an existing bit of funding and a bit of issue with the bank, or needing to refinance some existing funding elsewhere, or get some additional funding, which is the more common thing, I'm happy to deal with all of those scenarios.
And this kind of area is quite stressful. So I think within that, like, there's a saying that I tell people actively, as you know, I run a marketing agency. So, and I tell people now, not every customer is a customer that I want. So I tell people I don't work with idiots. If you're an idiot, I don't want to work with you. And some people are quite offended by that comment. But I think the point is, if you can work with people that you enjoy working with, and you can feel good energy from them, they're just good
Yeah,
people. That makes business
absolutely.
so much easier. So, but I can vouch for that. I think, Steve, people can see from your warm charisma coming across even as they're watching now as well. But you're great to work with, and very professional, very knowledgeable, um, great network, but just a good guy as well. So if you're looking to work with someone and in a stressful area, this is stressful for people. Let's be honest. Then Steve's
Yeah.
quite good to work with.
Thank you. I need to employ
Well,
you.
yeah, you should.
Very kind.
You can't afford me, but you
No,
could.
probably not.
Um, but okay, well let's if you any further tips you can give the audience, or shall we say, well, look, if you want to speak with Steve, I'll put the link to both your website and the LinkedIn into the comments.
Thank you.
And if the audience have any questions afterwards, that you'd be happy to, have a chat about those questions.
Yeah, I think I think people need to be able to speak to people they know and trust. And I would say, do not just accept the first thing that your bank is telling you,
Mm.
because you don't really know who you're talking to inside that organization. It could be somebody quite junior. So you need to take advice from people you know and people you trust. And that would be my sort of overall message.
Yeah, and pick those with experience, not
Yeah,
um, those based on price or the wrong metrics.
sure.
Awesome. Well, I think that's been really valuable for the audience. So I appreciate that. Thanks for joining, and
Thank you,
until
Dean.
next time, we'll see
Yes.
you. We'll see you again.
Thanks very much.